I've been trading for over 5 years and I've tried every strategy that you can imagine. Most of them failed. In the next 15 minutes, I'm going to show you how these two setups have made me over $11,000 this week alone. Here's the crazy part. Both of these setups play out from 9:30 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. So you can trade within the first 2 hours of the market and then go enjoy your day. I'll show you the 8 a.m. break and retest setup, then the liquidity sweep setup, backtest both over the last week with real numbers, and by the end of the video, you'll have 2 complete setups that you can use tomorrow morning. Let's get straight into it. Before I show you how they work, look at this. Over $11,000 in this week just using these 2 setups, and these aren't cherry-picked trades. I'm going to show you every single trade from Monday through Friday. The first setup is the 8 a.m. break and retest. This setup is pretty popular, but the second setup is just as powerful. Liquidity sweeps at untested highs and lows. Most traders have never even heard of liquidity sweeps, but once you understand them, you'll see them happening multiple times per day, and each one is a high probability trade. Let me start with the 8 a.m. zone setup because it's simpler and that's what you need to understand first. What is the 8 a.m. zone? Simple. It's the high and low of the 8 a.m. candle on the 15-minute time frame from 8 to 8:15 a.m. Eastern Standard Time, right here. While you're sleeping, institutional money is already positioning. By 8 a.m., they've shown their hand. This zone becomes your roadmap for the entire trading session. Step 1, mark out the 8 a.m. candle high and low on the 15-minute time frame. Simply go to this rectangle tool, draw the rectangle from the top of the candlestick to the bottom of the candlestick, and you have your zone. The next little trick that we are going to do is double click on our zone and make sure that this middle line is checked. This middle line is an inflection point, meaning it'll show us exactly when price wants to reverse or not reverse, so it's super important that we have a visual display of that up on our charts. Step 2, wait for 9:30 a.m. Eastern Standard Time. This is when the stock market opens and the volume comes in. Once you wait for 9:30, you see which direction price is breaking out to. In this example, we broke out to the upside, so we were looking for longs once we got the retest. Step 3, do not enter on the break. Wait for price to come back and retest the broken level. Once this midpoint holds, showing you that there's demand, or doesn't hold, showing you that there's weakness, that's your entry. Why does this work? Because institutions need to accumulate positions. The retest is where they add to their positions at better prices. When price is bouncing off the midpoint, that is your signal. Your stop goes just beyond the zone on the opposite side. Right here, my stop is around 4.5 points. Your target is typically 15 to 20 points on a 1 to 3 risk to reward minimum. As far as time frames, I like to go down to the 1-minute time frame to see exactly how price is reacting to the midpoint. Once I'm on the 1-minute time frame, I switch to the 5-minute to see if we can get a full 5-minute candle closure over the midpoint. And once we do, I like to enter, expecting a continuation. You can see right here that price came down, tapped this midpoint, and then immediately started showing some signs of strength right here with this big wick right here. Every 1-minute candle closure that we get over this midpoint is just price showing more and more strength that we are going to reverse. This shows a lot of strength, right? We had a nice buying wick, retested our entry again, and at that point I was pretty confident that the trade was going to play out, which it did. Played out, and I got a risk reward of about 1 to 4 on this trade, making me around $4,500 on that specific trade. That's setup number 1. Simple, clean, works almost every day. But now, let me show you the second setup that most traders never learn. Setup 2, liquidity sweeps. This setup is completely separate from the 8 a.m. zone, and on days where the 8 a.m. zone does not play out, this setup is super powerful. What's a liquidity sweep? Throughout the trading session, price creates highs and lows. Each one of these highs and lows has clusters of stop losses sitting just beyond it. These are what I call untested levels, peaks and valleys that price has not come back to yet. Institutions know exactly where these stop losses are, so what do? They push price just beyond these levels to grab all that liquidity and then reverse hard in the opposite direction. This is called a liquidity sweep, and it's the most predictable move in trading in my opinion. Step 1, identify untested highs and lows. You can do this super simply by using a free indicator called FXN Asian Session Range by Rob Minty. This indicator will show you Asia session in red, London session in yellow, and New York session in blue. Once you have these sessions marked out, it's very easy to find untested highs and lows. For example, on Monday, we had this untested London low. Step 2, wait for the sweep. Price will push above an untested high or below an untested low. You'll see this as a long wick. Price spikes to grab liquidity, then closes back on the other side of this level. You can see this literally playing out right here. Step 3, enter when price breaks back through the swept level. If price swept above a high and closed back below it, you go short. If price swept below a low and closed back above it, you go long. Your stop goes just under the untested low, and I like to target 20 to 30 points when I'm trading this setup. In full transparency, on this trade, I only caught 15 points because I was expecting price to have a decent sized reversal when it touched this level, which didn't end up playing out, but I followed my plan, I made money, so there's nothing I can complain about. When I am trading this setup, I like to monitor the 1 minute time frame to see exactly how price is reacting to this untested level. For example, if price is just breaking straight below it and it doesn't come back up to retest it, it's very likely that this is not a liquidity sweep, it's just price continuing to move in one direction. But on a day like Monday, when we break through it, come back down, then break above it again, that is showing us a very clear sign that price wants to reverse. What I like to do to make sure I don't get caught in the liquidity sweep is wait for a little bit of confirmation. So I like to wait for one 15-minute candle closure above the level, showing me that that was indeed a liquidity sweep and it wasn't a fake out. When price sweeps a low, all of the people who were short get trapped. When it reverses, they're forced to exit their position, right? So when you're exiting a short, you're actually buying back into the market, adding fuel to the move up. You're not predicting anything. You're waiting for institutions to show you where the liquidity is, grab it, and then you trade the reversal. Now I'm gonna backtest the strategy to prove to you that both of these setups work. Here we are on Monday, market opens up and we can clearly see that we have an untested London low right there. So we're gonna go ahead and expect to get into some longs if we can get a nice liquidity sweep of that low. Let's see what happens, right? We're on the 5-minute, price came down, swept this level. Now we're gonna switch to the 15-minute to see if we can get a candle closure. Once we get that full candle closure above this level on the 15-minute, we will enter some longs. Boom, in our longs right there. Let's see what happens. Take profit, right? We caught 15 points with a risk reward of 1 to 3 on that specific trade. Now let's go to Tuesday. Tuesday gave us a beautiful break and retest setup. Here's a little trick, guys. On days where we have an untested level really close to a New York Open 8 a.m. zone, I like to place my stop loss slightly below the untested low to cover myself from any potential liquidity sweeps. This means that my stop might be a little bit bigger, allowing me to target more points because not only will I capitalize from this 8 a.m. move, I'll also capitalize from price sweeping liquidity. Alrighty, everybody, so it's 9:30 a.m. Eastern Standard Time, and we can see that price is breaking out to the upside, meaning we are looking for longs off of the retest of this midpoint. Let's see how it plays out. Little choppy, almost getting stopped out, but we did not. Boom, price came up and targeted that next area of liquidity. I caught 25 points off of that trade with a risk to reward of 1 to 3. Two things that I'm looking at on Wednesday morning. The first thing is that we have an untested high very close, so I'm actually gonna see if I can catch a rejection of this high early in the morning. Let's see if it plays out, everybody. Boom. Beautiful rejection of that high. That was the first trade, giving us a 1 to 3 risk to reward. The second trade is actually going to be longs off of this midpoint because after price swept liquidity, we just retested the New York Open to the upside. So let's see if we can end the day with 2 successful trades. Boom, and we did. Take profit, hit. Beautiful, beautiful trade. All right, everybody, now we are on Thursday. Step 1, as always, is marking out our levels. Today we have a New York Open. We broke out to the downside, and we have an untested London low right here. On Thursday, I took a loss. As you guys know, we are traders. We cannot win every single trade. If somebody tells you that they win every single trade, they are lying to you. So we lost 7 points on Tuesday, which is completely okay because if you've been watching, you're seeing that we're gaining 20 to 30 points a day. So losing 7 points is not an issue at all. All that happened was price looked like it was gonna have a liquidity sweep, right? We got that 15-minute candle closure above, but got stopped out. Happens to the best of us. Price ended up reversing at this next level right here. So we were just a little bit too early, which happens. Now we are on Friday's trade. Start off marking out our New York Open. As always, wait for 9:30 a.m. Eastern Standard Time so we can see which direction price wants to break out to. The reason I drew this little graphic was really just to show you how much buying pressure comes in when we do have a nice sweep of this midpoint. You can see the exact moment that buyers decided to step in and push price up, which is exactly where we entered. And we ended this trade with 16 points in profit on a risk to reward of 1 to 372. Total profit was just under $12,000 in 1 week. And the best part about this is I'm working less than 2 hours per day. Some days give you the 8 a.m. setup, some days give you liquidity sweeps, and some days will give you both. By understanding liquidity and understanding these two setups, you will never run out of opportunities in the market. So why do you need both setups instead of just one? The 8 a.m. break and retest setup works when institutions are making a directional move. They break a level, let price retest it to accumulate more positions, and then continue. This is trend behavior. The liquidity sweep setup works when institutions are hunting stop losses. They're not trying to trend, they're trying to grab liquidity at key levels. This is range behavior. Some days the market will be in a trend, some days the market will be in a range. By having both setups, you profit on either of those days. The 8 a.m. zone tells you the institutional positioning levels, while the liquidity sweeps tell you where the stop loss clusters are. Combined, you have a complete picture of where big money is operating. Most traders only understand one or the other. They either trade breakouts and get chopped up on sweep days, or they only look for sweeps and miss the trending days. Here are 2 quick tips for you to make sure that you make as much money possible with this strategy. For 8 a.m. breakouts, the midpoint is everything. Make sure that buyers or sellers are showing strength at that midpoint. For liquidity sweeps, the wick is everything. If you don't see the clear confirmation, don't trade. The second tip, the 8 a.m. break and retest strategy works best in the first 2 hours of the day when there's more volume, while liquidity sweeps really work at any time throughout the day. So if you're trading London session or Asia session, you can also trade liquidity sweeps. Look, I just gave you a trading strategy that contains 2 extremely powerful setups. I taught you the 8 a.m. break and retest setup and the liquidity sweep setup, and I showed you back-tested results. This is everything you need, but here's the reality. Knowing the setups and executing them consistently are 2 completely different things. Most traders will watch this, try it for a day or 2, get confused about which setup to take, and then give up. That's why I'm working with a few people in my exclusive mentorship program. Inside, I will personally review every single one of your trades. I will show you in real time whether to look for the 8 a.m. setup or the liquidity sweep. I will help you understand exactly what untested levels to look at and recognize when a retest is legitimate versus when it's going to fail. I am literally going to hold your hand for the next 90 days until you get a payout from a prop firm. But here's the thing, this isn't some course, there's no buy now button. I only work with people who I know are going to succeed. The reason I do this is because I give personal feedback on every trade, and this requires my time. I don't want to work with somebody if they are not serious about trading. If you are serious about trading and taking your trading to the next level, click the link in the description of this video, let's hop on a call, see if you're a good fit, and if you are, I look forward to working with you. If this video helped you, smash the like button and comment any questions you have below this video. I'll see you in the next one.